when I try a case and I'm in the courtroom, I can tell if somebody's lying normally based on my gut. And I use that same type of analysis with meeting an operator.
Welcome to the Fully Funded Show. Whether you're a capital raiser, deal sponsor, fund manager, or LP investor, we've got the insights you need for investing success. Join Sam Silverman each week for expert interviews, insider tips, and strategies to fully fund your ventures. Let's go!
All right, we are back with the Fully Funded Show, this time with a friend of mine, Gib. Gib, thanks for coming on.
Hey, Sam. Thanks for having me. It's a pleasure. Appreciate it.
So, Gib, why don't you get the listeners some of your background? And I know you have some good stories for us here later today.
Yeah. So Sam, I've been a practicing attorney for 18 years, and I've owned my own law practice for 17. And I've learned a lot through that experience, learned a lot about running a business, learned a lot about the law, and I've had a lot of fun with it. But, about 2019, I got into real estate, and I was just trying to reduce my taxes and find a way to reduce my tax burden and to make some solid investments. And I kind of did something similar to what you did. I went out and bought a bunch of single family properties and kind of had that same experience that you had where I bought 14 single family properties in a period of 14 months. And I ended up realizing just how time consuming that was. I still own all those properties today, but that was kind of the eye opener for me that got me into passive investing. And that's when I kind of made the switch into multifamily apartment investing and doing what I do now.
Yeah, it's funny. You probably had the same thought as myself that you can go buy single family homes, buy a handful every year going forward, and it's passive. And by no means is it actually passive at all.
Yeah, I had the same concept. I went on a fishing. I went and fished in a fishing tournament that is like a 4-day fishing tournament, and the ocean was like slick glass calm during that time, which was really nice in terms of getting seasick. Nobody got seasick on the boat, but it was really boring because we didn't catch anything. And a buddy of mine was talking to me the whole time about real estate investing, and Sam, he told me that you can acquire these single family properties for 10 to 15% down. Maybe it was 15 to 20% down, but I was paying very little down. And I was able to acquire the properties and do CapEx on them. But it was tenants, termites, toilets, all that kind of stuff, kept me super busy. And the remodel and being in charge of, the construction crews doing all the CapEx, that was extremely time consuming. Like we'd have 2 or 3 different general contractors in our units at the same time, all coming in there trying to upfit the units. And it was a massive undertaking, like literally a full-time job.
Yeah, and something you probably saw too is that they're profitable, but when you actually start factoring in your hourly rate, especially as an attorney, you have a very clear hourly rate, and it takes away from what it is you're doing, but also takes a lot of headspace, right? In terms of managing those properties, finding your properties, managing tenants. And, when you looked at that pivot, right, what was that moment that you saw, okay, hey, it's time to start, doing something bigger, focusing elsewhere, right, reallocating your time? Like, how'd you think about that and why?
Yeah, so I had acquired I acquired 14 condominiums, which they're single family condominiums, and I purchased a commercial building and a short-term rental property. So I had 16 properties total. And with the short-term rental property, my accountant taught me about material participation, and the accountant said, if you materially participate in this property during the first year, you can take bonus depreciation and write off a lot of the money that you're putting into the property. And so that was a real pivotal thing for me. And that year was 2021. And I had the CPA do 16 cost segregation studies that year. So we did a cost seg on all 14 of the condos. We did one on the short-term rental property, and we did one on the commercial property. And I had about $1 million of ordinary income that year from the law firm. And I had literally between all my different investments, I had essentially like $1 million in depreciation. And so I ended up paying like no tax at all on $1 million of income. And at that point, my CPA sat me down and he said, Gib, there's so much more depreciation out there that you can get if you become a general partner in these real estate syndications. And so he actually put me onto a book that was written by a physician that was about passive income. And I read that book, and then I went out and watched every single podcast, YouTube video, anything I could get my hands on to learn about passive investing. I listened to it, I watched it, read a bunch of books, and that's what really got me realizing like I could get millions of dollars of depreciation and, make a lot of money and make good returns through this type of investing.
Yeah, it's funny. One of the biggest things people don't realize that if you actually look at your spend throughout the year, likely your biggest burden is taxes. And figuring out how to optimize your taxes is a huge, huge thing that's not talked about enough, especially as a business owner, real estate owner, real estate operator. There's so many different things in the tax code that work to your favor. So like I do the tax code as instructions, right? You go figure out where you fit in and, what they're incentivizing you to go do. Like similar to my background in sales, the tax code is basically a comp plan, right? These are the criteria, and go figure out how to go use the best of your ability. So the strategy for you of my biggest expense is otherwise we're probably paying $300,000 that year in taxes, give or take.
Sure.
That was a huge savings for you day one.
Yeah. If you can reduce that biggest expense, then you can really multiply your wealth a lot faster, right?
Yeah, and let's switch gears here for a second. What type of law what type of law does your firm practice?
Yeah, so the firm does, we do a lot of divorce, we do a lot of personal injury, and we have a couple other practice areas, but family law or divorce and personal injury are the two major departments that we have. And I personally have been practicing divorce law, since I first started. We brought on a personal injury attorney back in October of 2020, and that department quickly grew, and now it's more profitable than the family law side of the practice, which is even though I'm over there on the family law side and we've got several attorneys in that department, the personal injury department has become more profitable in recent years.
Sure, and the reason that is right, the family law typically is billed at an hourly rate, whereas personal injury usually tied to a contingency based on, payouts received from lawsuits taken, right?
Yeah, exactly. Like with personal injury, you're getting paid by the insurance carrier, and you're getting these large checks that are certified checks all at one time based on a contingency. With family law, when I first started, Sam, I was charging like $200 an hour. I think I went from $200 to $250 to $300, and now I'm at $450. But even if I go to $500 an hour, which would be a very high hourly rate for Eastern North Carolina, in order to make $1 million, I've still got to bill 2,000 hours. So, to bill 2,000 hours, you have to be at the office a lot more than that because there's inevitably going to be some non-billable time in your day. But yeah, the hourly billing is a tough thing, and I've thought about switching to flat fees. There are some attorneys that in the divorce world that do flat fees, but it's a little bit challenging because you might get stuck in a case that lasts 10 years, and if you quoted a flat fee, you could end up getting the short end of the stick.
So you have to have some good stories for us. Walk us through some interesting stories you've seen as relates to divorces. Also, a question too, I kind of follow from there is, how do you think about structuring anything, whether it be prenuptial agreements, whether it be marriage contracts, like what have you seen in terms of precautions people take to, find win-win outcomes to make sure that everyone's, comfortable, secure going forward as well?
Yeah, well, on the premarital agreement side of things, if you have children from a prior relationship and you're getting married, then a prenuptial agreement is pretty much, a mandatory type thing. I mean, nothing's mandatory, but you should have a premarital agreement if you have children from a prior relationship. And I honestly think a prenuptial agreement is essentially coming to an agreement on all the terms that are going to take place in the event of a divorce. And so by going ahead and hashing all of that out now, people can save themselves hundreds of thousands of dollars because they don't have to fight over it later when they're at odds with each other. So I'm in favor of a premarital agreement. I don't think everybody needs one by any stretch of the imagination. I know, Sam, when I got married, funny story, I had a net worth of like $100,000. And to me, at the time, I thought that was a lot of money. And I got kind of started later in life in terms of building wealth. So I think I was about 35 years old when I got married and, or maybe 34. But anyway, I didn't have a lot of wealth and I wanted my wife to sign a premarital agreement and she said no. And I decided, you know what, it's no big deal. But in hindsight, it's funny because, $100,000 now is just so inconsequential. But at the time, I thought it was worth a lot. But I'm in favor of premarital agreements. I think they're great tools. You can, with a premarital agreement, you can not only protect everything that you had coming into the marriage, but you can also protect anything that you acquire during the marriage. And so you can draft a premarital agreement in North Carolina that will basically say, unless I title this piece of property jointly, then it's going to be separate. And so, those types of things make a lot of sense in certain situations. And I think it's kind of a case by case thing.
Yeah. So what are some, things people don't think about that you're seeing kind of the back end, right? Where things that didn't work out, like what are certain things you're seeing in terms of whether it be trends, whether it be different scenarios that you find interesting? Like what are certain things that you want that people should be aware of prior to, doing something like this as well?
Well, I mean, if people have kids, I'm always in favor of getting a custody order in place. And one thing I see that's a trend right now is everybody wants to do a separation agreement. And a separation agreement is a private contract between the parties, whereas a court order, a custody order, is a court order, and it has a lot more teeth to it. And so I always recommend that if there are children involved, go ahead and get a court order for custody because it's kind of funny. What I do see a lot of is people sign a separation agreement, and then let's say that the separation agreement includes a clause that says that neither party is supposed to speak disparagingly about the other one. Well, then inevitably somebody does that and they violate that provision. And the only recourse that the person has is to file an action for breach of contract. Whereas if they had a court order, they could have the person show cause and held in contempt, which has a lot more teeth. So I see a trend right now. Everybody wants to resolve their case amicably if they can, and I think that's a great thing. But I think you have to be real careful about what documents you sign. Doing a separation agreement is just a private contract, and it doesn't have the teeth that you get from a court order. So that's one big one to be on the lookout for. With the premarital agreements, you can make them as strict as you want to make them, or you can make them less strict. But I think it's just real critical to have an understanding about what things are going to look like in the event of a divorce, it's not a fun thing to go through. I've had a lot of friends go through it, and it's a life altering thing. And if you've got everything kind of mapped out, um, that it just makes it so much easier when the time comes because everything's already decided.
Kind of tie that back into your ventures now, right? Like being a lawyer, being in contract law, right? Being in family law. How does that really change your view on, or help craft your view on partnerships? Right. I know a lot of what you've done in the syndication space, you're partnering up with both, operating partners and also investors. So on your end, like, how do you think about, if your strategic partners that you work with, being that you have this background in law as well?
Yeah. So Sam, my wife and I met when I was 30 years old, and she was 23 at the time. And we dated for like 4 or 5 years before we got married. And it was because I'm a divorce lawyer. Like I'm cynical, let's say. I've seen a lot of really, really bad things happen. And so I'm pretty cautious about getting into partnerships. And I think people really need to um, think about all the ramifications of being partners with somebody. And you're right, like in the real estate world and in the private equity space, like we inevitably partner with people a lot, right? We partner with operators, we partner with capital raisers. Everybody has to work as a team. And I found that to be really off-putting when I first was learning about these types of investments. I was like, God, I don't want to be a partner with anybody. But it's a team sport. And I think, you know, just know your partner and get as much information as you can about them. And, working with people that have a well-established track record is huge, because you can get in bad partnerships in anything in life, and getting out of them can be problematic.
Yeah. So on your end now, and you work with a handful of partners on your end, like what do you do in your due diligence process to go make sure that that partner has the highest likelihood of a successful relationship with you and also your investor as well?
So one thing I've done, Sam, is like get on a plane and go visit with people. One of the opportunities that I did early on, I was introduced to the sponsor through a mutual friend, and from a mastermind, and I got on a Zoom with the sponsor, and everything went really well. But before I raised money for the sponsor from my friends and family and other investors, I really wanted to have a face to face with them. So I got on a plane. I flew out to Phoenix, Arizona. I met the lead sponsor. I sat down with him for like 8 hours and asked him a bunch of questions and talked to him about like his prior experience. And then I called around and asked other people that knew him what their opinion was. And I've done the same thing with other partners that I've worked with. I think, you know, you can really hit it off with somebody on a Zoom, but it's definitely a different level of getting to know somebody when you fly out to wherever they are and sit down with them and really spend some time with them.
Honestly, it's funny. Like I thought people have these giant checklists of 100 items they go ask a sponsor, these financials and stuff. And I think oftentimes it's missed on people of getting on a plane, going to shake someone's hand, seeing them in person. I think that just goes such a long way still, especially in an age where so much of communication is done via text or email or phone call or Zoom, where that connection in person, I think, just goes a long way in terms of understanding how someone truly thinks and operates and who they are.
You know, I like the purpose of those trips was to do my due diligence, and I didn't ask for any special treatment necessarily, but I got special treatment because I took the time to fly out there and ask questions. And it's funny because those operators have viewed me differently than they do their other capital raising partners, because I did get on the plane and fly out there to meet them. And yeah, it's like a really simple thing, but it's yeah, I could have that 100 a checkpoint list, bullet point list, and I could have taken it and gone through it, but nothing. nothing replaces, that like actual looking somebody in the eye and that handshake. And a lot of it is like gut instinct, right? Like when I try a case and I'm in the courtroom, I can tell if somebody's lying normally based on my gut. And I use that same type of analysis with meeting an operator. And, they might feel like it's a little bit of a interrogation because I'm going to ask them a bunch of questions. And if they have an answer to every single question I ask, that's disturbing to me. I would rather them say, Gib, I don't know the answer to that question, but let me look into that and get back to you, because I don't need the guy that has an answer to every single thing. That to me is disturbing.
Yeah, you're right. Like there's a huge value in gut instinct, right? Like I completely agree. It's just how does something make you feel when you interact with them, right? That goes such a long way, and you just can't pick that up always fully on Zoom. And yeah, I think when looking at someone taking you seriously, getting on a plane, going across the country to go see someone and see them in person shows a lot of, legitimacy, right? In terms of using your own resources, your time to do so, and doing your homework that needs you likely, being pretty thorough and expect to go do meaningfully well in what you're doing as well, right? So I think the gut instinct piece of it too, that goes such a long way that people discount at times in a time where things can get commoditized based on numbers.
Yeah, I know that the relationships I built from doing that, it's given me a lot of opportunity too. They're like, if there is more responsibility in the group and they're looking for somebody to tackle that, they're more likely to consider me because I did fly out there and meet with them. I mean, it shows a level of seriousness too.
Sure.
It's like, you can get on a Zoom with somebody for 30 minutes and have a great conversation, but if you're going to fly out there and meet with them, you've already made a huge commitment in terms of time. So I think that goes a long way.
Yeah, I agree. So in terms of you for kind of what's next and kind of what is it you're focusing on, and kind of what do you see going forward for yourself as well?
Yeah. So Sam, I've been really, multifamily has been really good to me. I'm super excited about the state of multifamily right now, but I have made a little bit of a pivot. I'm still doing real estate, but right now I'm working on a medical real estate fund. And what we're doing is we're acquiring a bunch of medical offices all over the country. We've got 4 under contract right now that we're getting ready to close on. And we're raising about $3 million for that first group. And I love the triple net lease concept, where the tenant's responsible for the taxes, the insurance, the maintenance. Like we talked about earlier, multifamily, there's so many expenses associated with multifamily. Like even if you factor in, just your normal expenses, there's just stuff that comes up with multifamily. And I'm pivoting a little bit into medical real estate because I like the triple net lease space, these 10 to 15 year triple net leases. And what we're hoping to do, Sam, is to acquire a large portfolio of medical real estate and then sell to a healthcare REIT. Right now, there's over 100 healthcare REITs out there. And what we can do is if we can buy these properties at like an 8 cap, and then sell them as a large portfolio, you can really get a lot of cap rate compression there and maybe sell at a 5 cap when you bought it an 8. And so that's what I'm working on right now. Super excited about it. I've partnered with Derek Peterson again, who Derek and I have done. We did a ground up development project in Phoenix previously. And so this is just super exciting. I think my investors wanted to see something a little bit different than what I had been presenting to them. So I felt like I was getting a lot of interest in other types of real estate. So I think this is a perfect one. Going to the doctor is not going out of style anytime soon. It's super recession resistant. Even in a recession, people are still going to need to go to the doctor, and the doctor is still going to need space to see the patients.
Yeah, I agree. And I like how you're thinking about it too. I think what people miss at times from the capital allocator standpoint is that if you're only bringing someone one type of deal in one market and one structure, that they can't go invest all their money with you comfortably because they want to go see a level of diversity in terms of operator, deal structure, hold time, market, right? In terms of all those things they view how to go make their portfolios. So by offering different types of things, I think you'll want to be able to attract more total capital, and also people on your list who may, not like multifamily, or they may not like development. They may feel more comfortable in this, for example, as well.
Yeah, I totally agree. There's definitely some investors on my investor list that have been waiting for an opportunity, but what I had presented to them in the past just didn't do it for them. And so I do like to give them a little bit of diversity, give them something that looks a little bit different, has a different return profile, a different risk reward analysis, and I'm excited about that.
Cool. Well, Gib, what's the best way for the listeners to get in contact with you if they want to reach out?
Yeah, Sam. So the easiest way for them to reach out is just to go to my website, which is ironsequity.com. And they can find me there. They can book a time on my calendar if they want to talk. And I'd love to talk to anybody that has any questions or just wants to talk about investing.
Cool. Gib, thanks for coming on. We appreciate it.
All right. Thank you, Sam. I really appreciate you having me on. Have a great day.
You too.
Thank you for tuning into the Fully Funded Show hosted by Sam Silverman. If you are enjoying the content, let's take your journey further in the Fully Funded Mastermind. The Fully Funded Mastermind offers more than just insights. It's a mastermind community designed to solve the real challenge of raising capital. By joining, you gain direct access to strategies, coaching, and a network dedicated to turning your financial goals into achievements. Don't let capital raising be a barrier to your success. Visit fullyfunded.capital to explore how our mastermind community can pave your way to financial growth.
Thanks for tuning in to the Fully Funded Show. If you enjoyed today's insights, hit follow, share with your investing pals, and drop us a review. Connect with us on social media for bonus content. Your success is our mission. Keep those funds flowing. See you next time.